Friday, July 3rd, 11:26 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. U.S. stock market is closed today in observance of the holiday tomorrow, Independence Day in the United States. Short trading week. Look at a few time frames, intraday and daily. For the past few days of the markets. Question to you: who reacts faster to events, a business owner or a government? That's a very broad question. I didn't identify if it's a small business owner, big business owner. Being small, let's say less than 500 employees. Big business employee, let's say over 5,000 employees. In government, you could say a township, city, state, federal. Again, who reacts faster to events, business owner or government? I say that because if you're a small business owner, you're much more situated of things happening in real time because there's less people have to give you the information. First, if you're a big business owner, let's say Walmart, Amazon, you might have access to so much data. It's overwhelming. And it's, again, these companies may have a footprint beyond the United States, different time zone things occurring. And that's same with the government. You can have a municipality that has 300 people or a city that has 10,000 people. That's a lot of departments within those. Because this month we have earnings in companies, stock earnings. Many of these companies, being big and small, already know what just happened the last quarter of earnings. And you can make reaction decisions faster and speculate too what's going to happen for the next quarter compared to the data they have. Let's say with the states and federal governments, there's elections coming up and they rather cater to their lobbyists, their demographics, not necessarily what's the best. So businesses also are impacted how they want to make decisions based on pending legislative coming out of Congress, policies coming out of the Supreme Court, as well as elections, especially if they have government contracts that may be up for renewal. This information I'm about to share you can get a sense of what's occurring without being in those jobs, in those business owners or the government leadership, by looking at certain financial instruments. I'm not talking about looking at GameStop or a crypto or a token. No, I'm talking about what's impact the markets before there was crypto, before there were tokens. What's been solid for the longest time and still solid today and tomorrow. So first we're going to look at the bonds and notes, the intraday 4-hour time frame, the past 10 days. The far left is the 2-year note. The bottom left made a new low for the year. Are you aware of that? The 2-year note made a new low for the year. The high all the way up there, far away from the high. If you don't know, notes and bonds, when they go lower, yields, interest rates go higher. So again, look at the chart on the far left, the 2-year notes. Earlier this week, we went here into a supply zone. As expected, rejection, and we declined. Then have this move back up, test it again. Look at that, rejection. We're closer to the lows of the year than the highs of the year. Now we're looking at the 10-year note. Show you some information. There's the low of the year. There's the high of the year, closer to the lows of the year. Past 10 days, here's the high. Sitting here in consolidation. Of course, there were buyers, there were sellers, and the battle for the selling won. Marked down. Now we're looking at the 30-year. Here's the high of the past 10 days, consolidation, marked down. The point is, when you're looking at each of these, you see where the highs were at the past 10 days? There was rejection. We didn't continue going higher. We sold off. Okay, we didn't necessarily take out the lows of the year. Shows there were rejections at the high. Spent a few days at the highs. Smart money was selling. Dumb money was buying. Now I want to show you this at the higher time frame so you get a better insight. Daily chart. Look at the left, the 2-year note. The highs of the year, the lows of the year. The notes are declining. As they decline, yields and interest rates go higher. Don't fight the trend. Don't fight the trend. Stay the course. Trading short. Trading bearish on the opportunities of retracements on weakness. The 10-year note, look at here, the middle one. The high of the year, the low of the year. The trend is bearish. Multiple times we did retracements, filled opportunities to be taking bearish trades. Don't fight the trend. The far left, the 30-year, the high of the year, the low of the year. The trend is bearish. Again, multiple times we went up, retest, filled. Now let's look at the past few days on each of these. We have a swing high here, which tested this consolidation area, rejected it. Retracement, consolidation, rejection. Same here. Huge impulse move down. Same here on the 30-year. Yep. Again, these highs, these retracements on the upside have been opportunities to make big money on the move down. Don't fight the trend. Yeah, some people only use the daily chart or the intraday, but they're not looking at the longer time frame. For whatever reason. Well, again, this is the current economic situation I've just showed you. Now let's go look at currencies. 3 major currencies. The euro, the yen, and the pound. The euro, far left, the middle, the yen, and the far right, the pound. On the far right, the pound, we know what happened recently. We have a PM, prime minister, resigning. They have political turmoil, crisis occurring in their country. Same political party for the past several years, just people quit. Turmoil. Look, that impacts currencies. Foreign investors may not want to be holding those currencies. The middle one, the Japanese yen, they recently had political party change. What was it, last year? Same with Mexico was last year. And the far left, the euro. So looking here at the euro on the far left, the past 10 days, look at the high, the top left. Recent lows of the year. On a retracement to the upside. Bearish, looking for opportunities, trade bearish on retracements. Japanese yen, the middle grid. Lows of the year. New lows of the year recently. And the far right, the British pound, lows of the year. The past 10 days, they each made new lows for the year. So the people that have been buying on the dips for the past year have been losing. When you're at all-time new highs, I'd be trading bullish. When you're at all-time lows, I'd be looking to trade bearish. The only difference at these 3, the past 10 days, the pound, look at the far right, is higher versus the yen, the euro, the past 10 days are not. Put this in perspective, Now let's go to the daily chart. 3 major currencies. The far left, the euro. Look, the trend has been down. This is the 1 month chart. The trend has been down. Got my Fibonacci tool on. Look for a retracement to trade bearish. Yep. Key levels I'm looking at. Starting seeing rejection. The trend hasn't changed yet, but I haven't seen rejection yet for my entry single. The middle one, the Japanese yen. Again, look at the past month. The trend is down, doing a retracement, looking for opportunity for bearish trade. And the far right, the British pound. Same thing. The trend is down, doing a retracement, a deep retracement. Key level being tested, key Fibonacci level being retested, 0.618. That means the probability is on the back side down here, because it did a deep retracement, 0.618. The probability is it shouldn't break this low. So it might become a bullish trade. Better than these other two. The other two are leaning more bearish bias, where the British pound is leaning more bullish bias if on a retest down here it doesn't break. Then could be looking for the opportunity for bullish trade. But meanwhile, all three still bearish bias based on charts. Geopolitically, I just tell you the situation that's going on with their governments. Let's go look at the major stock indexes in the futures market. Again, 4-hour charts. Past 10 days, the S&P 500 futures on the left. We went in here, which is a supply zone, tested it, rejected. There's the high of the year. The middle one, the NASDAQ 100, here's the high of the year. Past 10 days, we haven't even retested it yet. You've been declining. Big sell-off. First, the far right, the Dow Jones Industrial Average, new high for the year. Yep. It's been performing better the past 10 days than the S&P 500 and the NQ. One reason the Dow Jones has been performing better the past 10 days. I shared in my videos, several of them, the past week and the week before that the Dow Jones Industrial Average this past Monday changed out a company. They took Verizon off and added Google. So that was this past Monday. I closed my option trade for 30% profits. I put that trade on the week before. That trade was scheduled for 14 days, that contract. I didn't have to wait 14 days to make 30%. That was a A+ setup, outstanding option trade, swing trade, outstanding. If I stayed in that trade till yesterday, I would have had more gains. I did good money management. Why risk it? 30% in 2 trading days? Outstanding. Good job out of me. Good money management. Especially, I told you, that option has more trading days left. Why would I want to hold it over a holiday weekend or days the market is closed? More things that could occur against me. Don't marry a winning trade. Money management. Take some money off the table. Lease the capital that you put into it. And then if you have profits, maybe consider riding them. But again, I use charts to determine why I'm closing trades. Yeah, look at here, these spikes. Let's go to the daily chart. Now we'll look at the cash. Far left, 3-month chart, S&P 500 futures. There's the high. This was the FOMC meeting, that gray vertical line. And look at this big whipsaw on Friday here. Wow. See this other gray vertical line was the FOMC meeting. So we're making lower highs here. Yep. That's concerning. Rejection. Same with the NASDAQ 100 here in the middle. We have a gap that hasn't been filled here yet. And lower highs. So there's a divergence here. S&P 500, The NASDAQ 100, they're making lower highs. And look at the far right, the Dow Jones Industrial Average, new highs. Again, I shared with you one reason it's outperforming. They took off a underperformer and putting on a young whippersnapper. They took off Verizon, which has been around for a long time, compared to Google, which they replaced on here, Google High Tech. It has a big improvement on here. And the NASDAQ 100, I shared several days. What's getting ready to happen there is NASDAQ 100 is taking a company off and replacing it with SpaceX. Think about it. So that being said, what I just showed you with the bonds and notes, the short-term notes have a big impact on currencies. The long-term notes and bonds impact the stock market. So we saw bonds and notes going lower, lower, interest rates going higher, higher. It will impact many of these companies even more so, as well as a strong dollar hurts these companies, the ones that export products and services. Thank you as always spending just a little bit of time with me. That's it for the video. Thank you kindly for watching and supporting.